What you're about to see is a full-length trade explanation and breakthrough that I've traded on a funded account. So this is a 45 to 50 minute video, but if you watch through it, you're gonna see me explain every single candlestick on a 1 minute chart. So enjoy the video and take notes. So I think that the market will run now. Inversion fair value gap once again. I would like to see the market only trade into its lower half. We also have a market structure shift here. And we also entered the daily buys and amount sell side inefficiency. And by the way, here it says trade of 8. Let me just open this up. Okay. How do I do this? Inverting fair value gap. So what I would like to see here is the market running below that level of sell side. We shifted the market. It is 1048. And what I saw was, it's enough with this. You already understand. What I saw was the fact that we consolidated between 9:30 and 10:30. So that gave me a huge insight within the current bias that I have, that the market will utilize the 1050 to 1110 macro for a lower run. Institutional order flow entry drill. Once the market takes this level of sell side, what I will do is I will trail my stop above this immediate rebalance, because that now would represent a balanced price range. This is 90 points of price range. Let me also do this. Once again, what I'm looking at is this fair value gap, but also this one is very important to me. How we trade inside of this. Trade into the 50%. See how the market wants to react from this. We're also entering 10, 50, 11, 10. The time period in which I would want to see the market expand lower. What I'm looking at right now is the market going back into this constant encouragement of this wick, using it as a means of resistance. That is a beautiful sign of rejection. What I'm going to do now is I'm going to bring my stop onto the immediate rebalance. So right now we have a kind of a free look. What I saw also is the market closing below the consequent encouragement of the weekly tail. I would like to see the market use this as a means of resistance and also leave this inefficiency open. I'm going to delete this immediate rebalance because there's too many annotations here. Let me check again 15M chart. We have a swing high information, so we're trading within the third candle of a swing high. I would not want to see this high being taken now. If this high is being taken now, then I am wrong and I'm completely fine with being outside of the market. And in the same time, looking at this exact position that we're in, I have a great spot. Because if the market goes above that immediate rebalance, then it means that it fails. Then it means that the market will go above that high anyways. So I would only go at a minimal loss. What I also see here is the market beautifully rejecting that consequent encouragement of the weekly tail. And at the same extension, we also have the 25% of this current fair value gap that we're looking at. So that would be a sign of weakness. And right now, what I would want to see is the market rushing aggressively through these lows and at the same time closing below this white fair value gap with speed and never touching it. So it will leave this open. What I would do normally right now is I would take all of my position off because I do not require that low that I have with my buy limit to be taken. However, I believe that I have a good position inside of the marketplace right now. Beautiful. I wouldn't not want to see this touched, but it is completely fine if it does it. I would have preferred for the market to leave this open, but we can go and create an immediate balance. Exactly like that, and I would like to see speed now. Market also went into the 50% of that fair value gap. It is completely fine if you want to also. Market's not going to do that. When the market reaches that opening range gap low, then I will put my stop at break even and have a free look. Matter of fact, let me just. No, I'm going to wait for it to hit it. Premises 75% of the implied dealing range being hit, which is in close proximity. But right now, this is like a free look. We have an immediate rebalance as well, so the market should leave now with speed below this opening range gap low. And if the market reaches the 50% of its order block, then I would like to see it go down again with speed. But note that we took a means of sell side, so the market can also retrace back into a fair value gap here. But I would prefer for the market to leave with speed, and I now will go into a bathroom break. All right, so it's time for break even plus commissions, and I would like to see now the market go with speed. That is the obvious level of sell side. We closed a little bit below that opening range gap low. That can be used as a means of resistance. Right now, what I wanted to do was get out of the position in itself. I mean, with the proper leverage, this could have been a great move to get out of, but I wanna get used to hold into more of distanced targets. And I also understand that we're now going to open another hourly candlestick. And I believe that the position that we're currently in, side of the marketplace, we're in a break even, so we have nothing to lose. Market can come back into that SIBI. I would prefer for it not to. So if I'm looking at a 15-minute chart, We're now about to begin the fourth candlestick of a swing high formation. Market can now see speed and distance below. A premium fair value gap that I'm looking at is this current SIBI, but my stop placement is perfect when it comes to allowing the market to retrace in that. So if the market indeed wants to retrace in that, then I'm also looking at the SIBI at its constant encroachment at its high too, and at the bearish order block's opening price. What I also observe is that we're trading within the current upper quadrant of the daily busy, which is highlighted in this big orange that we're trading in. Close below that 930 inversion gap. We're currently trading also into a bullish order block. See if the market wants to go below it with speed now. Below its 50%. Or if the market wants to dig up into a bigger premium before indeed leading to the run that I expect. We're now trading again inside of the 10, 50, and 11 cent macro of movement that I've studied a lot. And this is also the discount internal AM session sell side, which can be targeted during the lunch time period. So the lunch time can begin at 11 sometimes. That's why I'm targeting these lows, because we've also consolidated between 9:30 and 10:30. That would constitute the AM session, what we would call AM session. I would like to see the market now go downward speed below this low. If I had more contracts on and I could indeed take partials, I would take a partial below this low, making it running down equity partial. But if the market indeed will go below this, then I would want to see speed and distance. I can also allow, as I said, for the market to go into that fair value gap, and if it wants to take me out, then it will take me out. I would lose absolutely nothing. But overall, I think that I'm well positioned in this case. Market responds quote unquote well. It rejects the 50% of the order block. But I'm patient. We can see this swing high being taken. This is absolutely no problem because the market is now perhaps going to seek a premium, which I'm looking at this range. This is the parent price swing from this high to this low. This would constitute my range of retracement expectations. If the market goes above this high, this would be the only PD array that I would like to see framed. But I would prefer for the market to reject this and continue lower, because we've taken this level of sell side. The market can see a retracement. It can. I would prefer for it not to, but it can see a retracement. And I'm utilizing the knowledge of taking the AM session buy side here right after the 10:30, then shifting below this low, which is the low that was responsible for this high being made, but it also my model constitutes an anticipated market structure shift with an inversion fair value gap, and also I understand that my model can be a delayed total sweep entry because we have this swing high being made after the market has run this buy side. I see this, I see the fourth candlestick, boom, swing high. Therefore, we have to take this low. Therefore, when the market closes below the inversion gap, and if it gives me the opportunity to entry inside of this inversion fair value gap with a retest of said inversion fair value gap, then I would do it 100%. And then one problem that I faced a lot in my trading was that I did not stick to my model and I would not trust it. Therefore, this is why I take the trade and I talk about it and I talk about my problem. I just took it. And therefore, I will submit to it no matter the outcome, because this is what I backtest and this is what I study. I'm looking at the bear shorter block that we currently traded in. Let me see a 15M chart. Is the market more likely to drop now? 1 hour chart. I believe I'm well positioned in this current trade environment. Like, the market has no reason to go above that high, and if it goes, then I'm wrong. But what I would expect is even lower prices than my take profit. But my terminus, my target, my drawn liquidity, my ultimate goal is not going to be the same as my take profit. Never. Because that is the best case scenario. I don't like the consolidation currently that we're doing. The market can go above that swing high. And if it goes above that swing high, we can also, again, have the fair value gap, the CB, and that swing high inside of the fair value gap as a means of where the market can continue the movement lower. But the trade could be done below this level of sell side and get a good risk to reward model with that inversion fair value gap. But I want to hold for lower targets. So therefore, this is a means of buy side being taken. I do not see this as a means of market shifting, and if it does, then I'm completely fine with it. I accept that I'm wrong, and I'm proud of myself that I've risked and I was able to endure risk, because this was one of my adversities, that I would see these movements and I would never risk money on them, because I would have been, what if I'm wrong? Let me be wrong. That's risk, right? So 10.50, 11.10, macro, short, bicep being taken. If the market goes below this up close candle, I would frame this as a means of balanced price range. And I would love to see the market rushing and leaving that fair value gap open. That would be a breakaway gap, and that would signal weakness inside of price action. What I will do is I will frame this as a balanced price range, bidding range. So if the market goes below this, then it will go below it with speed. Now the market, I believe it will go down with speed. And I would want to see closures below this opening range gap low and below the low that I currently have highlighted in red. Like this. I never want to see it reject right now with speed to the upside, exactly like this. I don't want to see the market do that. I want to see closures. I don't want to see a swing low being formed here. I'm looking at this order block here and this one. See, I don't like that. I have my finger on the trigger. If the market creates a swing low here, then I will close this one. And I believe I'm gonna do it. I'm just gonna wait. Looking at the order block, see how we close. If we close above the opening price, and I would close it. Being threshold. I'm looking at the 50% of the order block. Let me look at the 15 real quick. I will close it here. I'll continue the tape reading regardless of the result. Because on a 15-minute chart, I don't like how things look. The market can indeed go below these right now, but this would be the trade.